Well, I have 5:30, and I think since everyone has a busy schedule, we'll get started. Welcome, and thanks for joining us this evening for our Encore session of the Paycheck Protection Program Loan Forgiveness Explained webinar. My name is Sandy Ratliff. I'm with Virginia Community Capital, and we are happy to be partnering with the Virginia Small Business Development Center Network and the Virginia Small Business Administration to present this webinar. Our objective is to help you understand the eligibility requirements and to get the process started for your PPP loan. Now, before we get started, a little housekeeping information. And in order to keep the webinar flowing and to stay within our time frame, we have muted everyone. However, we do want to hear from you. So if you have a question, please post that in the Q&A section, and we will address that at the end of the presentations. We have a super lineup of presenters today who bring a wealth of experience and knowledge to our program. First off will be Tim Johnson. He is the director of the Mason Small Business Development Center, and Mike Austin, who is the Access to Capital Specialist with the Hampton Roads Small Business Development Center. They will share some information about the SBDC resources, but also they will go into detail on how to prepare the PPP loan forgiveness application that came out several weeks ago. Following them will be Joey Barnes. Joey is the Senior Vice President of Small Business Loan and Small Business Loan Officer with Virginia Community Capital. And Joey will provide an overview on the forgiveness process and requirements as a PPP lender. And then closing out the group will be Carl Knoblich. Carl is the District Director of the Virginia Small Business Administration, and he will share some of the top questions and misunderstandings that business have regarding the PPP program. Now, as I stated earlier, we want to hear from you, and we will be using the remaining of our time totally focused on your questions. So I encourage you to post your questions early to the Q&A section, and we will address those at the end. Tim, Mike, I will now turn it over to you.
Thank you, Sandy. And I do need to share my screen here, so hang on one second. All right, I have it up here. Thank you, Sandy. Good afternoon, everybody. I'm Tim Johnson from the Mason Small Business Development Center, and joining me is Mike Austin from the Hampton Roads Small Business Development Center, and we are part of the Virginia SBDC network. We consist of 26 centers throughout the Commonwealth, and we are in partnership with the SBA and also funded by the Small Business Administration to provide resources specifically to our small business community. We also get funding and direct support from our local economic, you would say, entities around the Commonwealth, including our county and city local economic development authorities, our chambers of commerce, as well as colleges and universities to provide us space and resources to provide services. So what do? Well, we're your counseling center for your small business and business owners to help you grow your business. We provide one-on-one counseling as well as training and a number of workshops to help you grow your business. And of course, with the onset of the pandemic, we are in a virtual environment today. So we're doing almost all of our sessions through Zoom or at least some version of virtual communication. And of course, we have been in the last few weeks, we're very much focused on the support for the COVID pandemic, and now finally getting into the recovery stage and getting some businesses open. Our business advisors also include all types of business support that can include financing, marketing, as well as business operations. So for those who are new to us, I would say please seek us out. For those who are already using us, good to see you again. I'm glad you're here. And so for this session, we are focused primarily on the areas in and around the payroll protection program. Since the beginning of the pandemic, the SBA has very much relied on the SBDC network to be a conduit for the information flow of assistance that's being provided by the federal government, including things like the Economic Injury Disaster Loan, or EIDL, as well as the PPP program. And so this workshop is, we're certainly going to be talking about the forgiveness application side of things, but we do keep in mind that the devil is in the details. And I almost feel like we're a little premature with this Encore, only because some new legislation was passed last Friday, and we've yet to get any specific new guidance or changes in the application itself. So we would have to say this presentation is sort of based on our opinion, but certainly stay tuned to our resources, and hopefully we'll be able to provide you with the latest as soon as it's coming out. If you go to our website at thevirginiasbdc.org and look for locations, we also have another section called Recovery. This is where this presentation, the recording of the presentation, and other information, including the application, will be stored under a section called, we're called Record Keeping, under the Recovery page. So do seek us out. For this particular session, we're going to focus on the application itself, and I'll give you an overview. We'll move to some of the schedule completion, the application completion itself, and the safe harbor tests. And we'll end it with some tips and considerations before we get into the Q&A session. We have Q&A available for you, so as you want to ask questions, please use the Q&A session at the end of the presentation. After we're done, will be followed by Virginia Community Capital will be also providing some information that they have, and then we'll open it up to the team, including Carl Knobloch, our distinguished SBA director. So to start off, if you have not downloaded the PPP application as it currently stands, it is an 11-page application that you can provide or find from the SBA or the Treasury Department, as well as our website. And it really is broken down into 3 sections that are really important to you. The first section is the PPP application itself. It starts on pages 3 and 4 and includes the signature line and certain representations that the business owner has to make as they submit. It also includes really the completion of the calculation of the forgiveness amount, and that information comes from Schedule A. Schedule A starts on page 6, and it is where the compilations of the total payroll costs are determined, and that information will roll to the application. But it all starts with the Schedule A worksheet that starts on page 9, which is where the information regarding specific compensation to your employees are recorded. There are 2 tables there. Table 1 are for employees earning under $100,000, includes information about the FTE determination and salary reduction determination, and I'll explain what that means in a couple of minutes. There's also Table 2 for those employees that earned over $100,000 last year, and the forgiveness caps salaries at $100,000 on an annual basis. So what does it look like, and where do we start? We start with the Schedule A worksheet, which is starting on page 9, and this is what it actually looks like, where you will be needing to detail out your employee information, the cost compensation that they've received, and the calculation dealing with their FTE equivalent, and I'll explain that in a minute, and a potential salary and wage reduction if you actually reduce their salary or their hourly wages below 75%, and I will explain that shortly as well. So what do you need for worksheet tables 1 and 2? Well, we need the gross salaries paid during the 24-week period. The original PPP plan had an 8-week period for which this was to be calculated, and the new guidance now has extended that to a full 24 weeks. So if you were to pull your payroll registers after 24 weeks and look at each of your employees, that's where the information is going to come from. I actually have seen a couple of the payroll companies are already providing specialized reports specifically for this forgiveness. For example, ADP clearly has provided that information that will potentially be used in lieu of Worksheet A, but it is where you're going to get that information from. The other part of the other two columns there is the FTE or full-time equivalent calculation for the coverage period for employees based on a 40-hour week. And so what that means is, as you look down your employee roster, you're going to determine, are they a full-time employee, of which you would enter a number, the number one for one person, or for part-time employees, we need to know what their part-time equivalent of a full-time employee would be. So for example, over a 40-hour week, if they average 30 hours during the forgiveness period, then they would be a 0.75 FTE. If they worked 8 hours on the average over a 40-week period, they would be a 0.2. And each one of those is entered into that FTE column and then added up at the bottom. The application as it exists right now, you can use an alternative method, which would allow you just to put 0.5 for part-time, separate from the full-time employees. There's also a section in there for what's known as the salary/hourly wage reduction calculation for each employee, and it's based on a series of safe harbor tests that begin on page 7 and 8. So if you've not read those pages, there are some specific tests that we have to take each employee through. So what we need you to do is gather your payroll registers for the covered 24-week period, and you will be comparing this against a comparison period, and I'll explain what those are in just a minute. So for the portions called the FTE and salary reduction determination, as I said earlier, the test questions begin on page 7, and they are applied to each employee. For the FTE impact, and you will be comparing this to certain coverage periods, and the idea is the expectation is that you will, in order to get a full coverage in terms of forgiveness and have completed and match the safe harbor, the idea is to have the same number or higher number of FTEs during this coverage period than it would be for the comparison period. So we are looking at two choices for comparison periods. That's January 1st to February 29th of 2020, or from February 15th to June 30th of 2019. So your method of calculating your FTE, either or for part-time employees where you're using the average or the 0.5, you have to use the same method for either your comparison or your coverage period. And when you actually get to Schedule A on line 13, if you've had fewer FTEs during your coverage period, then you'll actually get a reduction in equivalent to the percentage that you've reduced your FTEs, and that will have unfortunately a bit of a punitive effect on your coverage forgiveness. The wage and hourly determination a potential punitive effect if you've been paying your employees below 75% during the coverage period of January 1st to March 31st. So the idea is if you reduce their hourly wage or reduce their wage employees, reduce their annual salaries for wages below 75%, then there are a series of steps that you'll need to go through that are looking at annualized salaries at several different time points throughout the coverage period, and it will produce a reduction for those employees that have been paid below 75% on each individual employee. So it's a complicated formula, and you have to do it for each individual. So at that point, once this form is filled out, we're ready to move to Schedule A. So Schedule A starts out with line 1, which is transferring the totals from the worksheet table 1. And so that's your total cash compensation that you've paid out in salaries. Same goes for the average FTEs that have calculated. And in line 3, if there was any salary wage reduction that was calculated, the value of that wage reduction is also entered in line 3. As we move to the middle part of the worksheet, lines 4 and 5 come from table 2, and then lines 6 and 7 is where other aspects of cash compensation also come in, to include employee health insurance premiums and any retirement contributions made by the employer, and this is where other cash compensation amounts would be entered. Line 8 probably doesn't apply to most Virginia businesses. We don't have any employer, state, or local taxes assessed on employee compensation that would apply here. But an important part, which is line 9, this is where business owners are to report their compensation. It would not be on the Schedule A worksheets. So owners would be totaling up and providing the information of the compensation that they are receiving during the coverage period. And then when we get to the bottom of worksheet A, all the payroll costs are added up, and then this is where the effect of the FTE reduction comes into play. You'll be looking at the average FTE during the reference period versus the average FTE for the coverage period, and your reduction quotient will be driven based on how much below you are against the reference period. So for example, if you had 10 employees during the reference period and you during the coverage period reduce that to 9, then your forgiveness of your payroll costs would be reduced by to 90% of your payroll costs, and that occurs on the application itself. So with the completion of Schedule A, we're ready to move to the page 2 of the PP application itself. So line 1 starts out with the costs from payroll that are coming from Schedule A, line 10. And then lines 2, 3, and 4 is where now you're able to include other expenses that are part of the forgiveness costing, including business rent and lease, business utilities, and line 2 for any business mortgage insurance if you are paying mortgage on your business physical location as opposed to renting. From lines 5, 6, and 7 will be where the information regarding the FTE reductions and adjustments will occur. And then finally, when we get to lines 8, 9, and 8 and 9, or I'm sorry, line 8 will determine any modified total of your forgiveness amount. Line 9 will be your actual PP loan that you received. And line 10 will be the payroll cost under the original application. You had to get to a 75% requirement. Under the new rules, that has been lowered to a 60% reduction. And then the last calculation, which is line 7, it will look for the lowest value of your modified total, your PPP total, and your payroll costs if it is dropped below 60%. The thought, though, is now that you've gone to 24 weeks, the opportunity to at least have the ability to get all of your payroll or your employees compensated through payroll for 24 weeks probably helps very much make sure that you've maximized the forgiveness amount. However, when we actually looked at some of the guidance for line 11, one of the first things that I noticed in the instructions itself, that for those businesses that also received an EIDL advance that was up to $10,000 based on the number of employees you had, that amount will actually be deducted from your forgiveness amount when your lender remits to the SBA. So you may not get the whole amount forgiven because of that advance, and that advance would roll over into the formal loan. On page 4, the signatures and initials for the representations will also follow, and your lender will provide a list of supporting documentation that you'll need to substantiate all the calculations and the information that are being provided in your application. We have created an SBDC spreadsheet that we have on our recovery page to help you do the math, and it is a replication of the application, but it will allow you to do some of the salary reduction tests, as well as do all the math and all the percentages. As soon as we get new guidance from the SBA, if they modify this form, we will update that spreadsheet. So we certainly recommend that you do it. And then from there, completion of the application and its representations will be submitted to your lender. So we have also drafted, as part of this presentation, a number of lists of what we're calling tips and considerations. Well, I'm not going to read all of them. I've picked out a few of them that may become important to you. So one of the things is that really is starts with a covered period versus an alternative payroll covered period. When we were dealing with an 8-week period, your payroll might have fallen just outside of the 8 weeks. So you could actually slide your payroll covered period by a week to include that you got at least 4 payrolls in this period, in this cycle. Now that we've gone for a 24 pay period, then hopefully we're able to cover certainly enough payrolls to get all of your employees in there. If you are also trying to prepay some of your expenses, for example, paying a full year of rent as a prepayment, that's not allowed. It only can be expenses that are normally borne in that period. In one of the concerns and ability to get some relief on the FTE reduction, if you've actually attempted to bring somebody back and offered the opportunity to return to work and the employee refused, or you terminated an employee for cause, of course, with proper documentation, that reduction of their headcount will not affect your forgiveness. We also saw the possibility that if your business could not restore to a comparable level of activity because of social distancing or federal health guidance, that also may not affect your forgiveness. So that may also be a consideration that for businesses that were just only now being able to reopen into phase 1 may not be penalized for not having been able to bring back their employees. And funds may not forgiven may be converted to a 5-year loan, and that's for PPPs that were done before June 5th. And then you'll get a forbearance of 6 months before you have to begin making payment. My understanding is that conversion to a 5-year loan is at the option of the lender. For those new PPPs after June 5th, it will be a 5-year loan. Once your application package has been received by your lender, they have up to 60 days to determine the amount of forgiveness. And then the SBA has another additional 90 days to review the lender's recommendation. So with this, you'll also need to retain your records for a minimum of 6 years. And all of this is very much subject to audit and certification. So with that, I'd normally say, well, we're ready for questions, but we're actually going to turn this back over to our partners at Virginia Community Capital, and they'll talk about their lender perspective and what they're looking for in terms of documentation. So with that, thanks for your attention, and I'll stop sharing and bring it back to the team.
Thanks, Tim. Joey, we will turn it over to you.
Okay, and thank you, Sandy. And I am going to share my screen. Okay, so can everyone see that?
Yes.
Perfect. Okay. So Good afternoon, everyone. As Sandy said, I am Joey Barnes. I'm the Small Business Team Leader at Virginia Community Capital, and we are a CDFI bank with offices in Richmond, Christiansburg, and Norfolk, Virginia. Our focus is the state of Virginia, and we utilize government programs such as the SBA 7A and 504, along with the SBA Express. We also provide traditional small business lending and guarantee lending utilizing programs in addition to the SBA and even the USDA. Today, I'll focus on what we at Virginia Community Capital will require our PPP clients applying for forgiveness and the documents that will accompany Form 3508, which Tim covered a little bit earlier. Please note that this is what we as a lender will be requiring. Other lenders may require something less, maybe a little more, but hopefully we'll all be requiring something that's similar. The form that we'll be requiring are the loan forgiveness calculation form, certification page, and Schedule A. We'll also be requiring documentation backing up the forgiveness calculation and Schedule A. These documents can be found on page 10 of the application and can be seen on my screen right now. Additionally, we'll be asking our clients to complete and sign a checklist, which will provide them. And what that checklist will outline would be the required documents on page 10 of the application. We'll also ask all of our PPP clients to include the checklist in their application package to further emphasize that they've read it, acknowledged, and provided each of the items. Similar checklists or certifications may be required by your lender. The required backup documentation can be broken down into 3 categories: payroll, full-time employees or FTE, and non-payroll expenses. The first and largest category of loan forgiveness is payroll. With the approval of the PPP Flexibility Act, borrowers can remain eligible for loan forgiveness by using at least 60% of their loan for payroll. That's a change from the previous 75% that borrowers were required to use. You need to provide payroll documentation to verify the eligible cash and non-cash benefits from covered and alternative payroll covered for the period. As a quick reminder, the initial term rule from April 2nd, 2020 states payroll includes salary, wages, commissions, or similar compensation, cash tips or equivalent, payment for vacation, sick leave, allowance for separation or dismissal, payment for the provision of employee benefits, contributions of group health care, and payment of state and local assessed on compensation. For independent contractors and sole proprietors, this includes wages, commissions, income, or net earnings from self-employment or similar compensation. The SBA also provided clarification that salary, wages, and commission payments to furloughed employees, bonuses, or hazard pay fall into similar compensation and can be included in payroll as long as it does not exceed $100,000 on an annualized basis. Page 2 on the application indicates what is an eligible payroll cost. They are considered paid on the day that checks are distributed or when you originate an ACH credit transaction. Costs are considered incurred on the day of the employee's pay that is earned. Incurred but not paid payroll during the last pay period of the covered period are eligible for forgiveness if paid on or before the next regular payroll period, i.e., if an employee earned pay but was not paid during the last covered period, you are able to count them if you paid them on or before the next pay period. So what documents do you need to provide? Number 1, bank statements or third-party payroll services documenting the amount of cash compensation, A lot of the third-party services we've seen are Gusto, ADP, and Intuit. As a note, the application may be approved more quickly if you provide a recognized third-party payroll record, as this will allow us as lenders at our discretion to perform a minimal review compared to a more extensive review if it's an unrecognized source. So that might be a shortcut. Number 2, tax forms. A third-party payroll service provider reports which overlap with the covered or the alternative payroll covered period. With these, we typically have seen the 941s and state quarterly taxes that the company have or will report. The final item will be payment receipts, canceled checks, or account statements documenting the borrower's contribution to employee health insurance and retirement plans that the borrower included on lines 6 and 7 of Schedule A. FTE, for the full-time employee category of documentation, you need to indicate which one of these categories you chose to complete line 11 of Schedule A. A, the average number of FTE employees on payroll per month employed by the borrower between February 15th, 2019 and June 30th, 2019. The average number of FTE employees on payroll per month employed by the borrower between January 1, 2020 and February 29th, 2020. Or in the case of a seasonal employer, the average number of FTE employees on payroll per month employed by the borrower between February 15th of 2019 and June 30th of 2019, or between January 1st, 2020 and February 29th, 2020, or any consecutive 12-week period between May 1st of 2019 and September 15th of 2019. Similar to payroll documentation, we need to provide documentation showing FTE can be payroll tax filing forms, the 941s, or the state quarterly business and individual employee wage reporting and unemployment tax filings report. A handful of clarifications have actually been made by the SBA. The PPP Flexibility Act has extended the covered period from June 30th, 2020 through December 31st of 2020. This gives you all until the end of the year to spend the PPP loan proceeds. So it's not the big push that we've seen to pay them. The Act also extends the forgiveness period to the earlier of 24 weeks after the loan disbursement date or December 31st. This change also allows borrowers to reopen gradually over an extended period of time to have more of their PPP loan eligible for forgiveness. If you've already have PPP funds, you can still choose the option to use an 8-week covered period. This feature was added to ensure that borrowers that maintain their FTE and average salary levels and spent their PPP loans over the original 8-week forgiveness period, but are not able to reopen or fully reopen and need to reduce headcount or wages following expenditure of PPP loan funds, are not prejudiced by the new longer forgiveness period. The new Act did not extend the time for you to apply and be approved for PPP funds. You still must apply and be approved for the PPP funds before June 30th to be a part of the program. The PPP Flexibility Act adds an additional safe harbor exception to the FTE-based reductions in forgiveness. A borrower's loan forgiveness will not be reduced due to a reduction in FTE or headcount. If the borrower can document in good faith that it was unable to rehire individuals who had been employees as of February 15th of 2020 and able to hire similar qualified employees or unfilled positions on or before December 31st, 2020, or if the borrower is unable to resume normal business activity levels due to compliance with HHS, CDC, or OSHA requirements or guidelines in effect between March 1st, 2020 and December 31st, 2020. Related to the maintenance of standards for sanitation, social distancing, or any other worker or customer safety requirements related to the COVID-19 pandemic. The last category of documents falls into the non-payroll expenses. Documents in this category need to verify obligations and services prior to February 15, 2020, and eligible payments from the covered period. Please note, as the PPP Flexibility Act, the eligible uses have. If you have business mortgage interest payments as an eligible use, you'll need to contact your lender and have them provide you a copy of the amortization schedule, and you'll need to provide your receipts and canceled checks verifying eligible payments from the covered period, or your mortgage lender account statements from February 2020 and the months of the covered period through 1 month after the end of the covered period, verifying interest amounts and eligible payments. Business rent or lease payments, a copy of your current lease agreement, and receipts or canceled checks verifying eligible payments for the covered period, or the lessor's account statements from February 2020 and from the covered period through 1 month after the covered period, verifying eligible payments. For your business utility payments, copy of your invoices from February 2020 and those paid during the covered period, and receipts, canceled checks, or account statements verifying their eligible payments. As stated on the application on page 2, utilities fall under electricity, gas, water, transportation, telephone, or internet access for which service began before February 15, 2020. Note that all non-payroll costs must be paid during the covered period or incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. But the SBA has provided clarification that if a borrower's non-payroll expenses straddle the covered and non-covered period and are paid after the covered period, the borrower may seek partial forgiveness of the expenses incurred during the covered period, but not on the next regular billing date. E.g., a borrower's covered period ends on July 26th and the electricity expense for July are paid on August 10th. Electricity expenses from July 1st to July 26th would be forgivable. We at VCC will be looking through the application and will check for the following items. We'll confirm receipt of the borrower certification contained in the loan forgiveness application. We'll confirm receipt of the documentation you must submit to aid in verifying payroll and non-payroll costs as specified in the instructions from the loan forgiveness application form. We'll also confirm your calculation of the borrower's loan forgiveness application, including the dollar amount of your cash compensation, your non-cash compensation, and compensation to owners claimed on lines 1, 4, 6, 7, 8, and 9 of the PPP Schedule A. And we'll be verifying your mortgage interest payments, your business rent or lease payments, and business utility payment claims from lines 2, 3, and 4 of the forgiveness calculation form. We'll also confirm that the borrower has made the calculation on line 10 of the loan forgiveness calculation form correctly by dividing the eligible payroll costs claimed on line 1 by 0.75. And as a final note, we as a lender have 60 days from the receipt of a complete forgiveness application to issue the decision to the SBA, which can be an approval, part or in whole, a denial, or a denial without prejudice due to pending SBA review of the loan. At this time, we must request payment from the SBA. The SBA will then provide payment to the lender within 90 days. If a review by the SBA is required, We as a lender will require Schedule A worksheet to be filled out if you did not submit it with your application. And that was a lot, but we've covered page 10. And so, Sandy, I'll turn it back over to you.
Thanks, Joey. And I will bring it back up. And next up will be Carl Knoblich with the Virginia Small Business Administration. Carl, thanks for joining us. Carl, can you hear us? I think you're muted. Carl? We can't seem to get Carl. How about we ask a few questions while we wait for Carl to get on the call with us? Will that work? To my other panelists?
We're looking forward to it.
Sure.
Okay. And we've gotten several tonight. Whoops, sorry. Can the entire loan be forgiven if it's used wholly for payroll?
Absolutely. There's a more of a minimum threshold that you need to get to 60%. Anything over 60%, right up to 100%, would be certainly forgiven.
Okay. And by the way, we had several people ask if a copy of the presentations will be forwarded to attendees, and yes, we do plan to share that. It may be a day or two, but we'll get that out. Now, we've got a ton of questions tonight, Tim, on basically the same question, and it has to do with the 24-week period. Several applied for only 8-week period. Do they have to wait until the end of the 24 weeks, or can they go ahead and apply at the end of the 8 weeks?
So a very, very good question. And again, we're sort of dealing with our opinion, since we don't have necessarily final guidance from the SBA or the Treasury Department. But the idea of extending the 24 to a 24-week period was to allow more payroll to be made to employees in order for you to get over and above your loan amount. The loan amount won't change, though. If the thought is, well, if it's 24 weeks, could I get a bigger loan since I only got an 8-week loan? Answer is no. This is what was provided, and you'll have the opportunity, though, to within 24 weeks apply that loan payments to payroll and get it forgiven.
Sandy,
Thanks.
this is Carl.
Great to have you back, Carl. We wondered what happened to you.
I was talking, everything was open, but it looked like I was muted at your end because it just told me I'm unmuted finally. I redialed in twice.
Well, so, great to have you back.
Yeah, to respond also to the great answer on the 24 weeks, the one thing I'm trying to stress to people right now, those that had the 8-week original format, depending on what stage you're at, really step back and re-strategize how you're going to use your remaining funds, because that's the biggest issue that we're encountering right now when people are calling in. And it's like you had to redesign yourself. And I know the SBDCs have been an excellent resource in helping people to think at it a little bit differently with those that have already used like half their funds and things like that, dealing with that. But you want me to address the top questions real quick for you?
Yes, please.
Okay. With that, the first thing I want to stress to everyone, June 30th is the deadline. And I'm going to tell you, one of your biggest challenges right now is actually finding a lender that's able to do the deal, because several lenders have stopped processing. So you will have to do more work to find lenders that are still readily available. that will do these loans. So I just giving people a heads up that it will be a more of a struggle than it was previously with trying to find lenders.
Just to clarify, that's for business owners that have not applied for PPP yet.
Correct. Yeah, correct. Yeah, those that have not applied. Yeah, because several people asked if they could still apply. And the other thing is the question still coming up: can a sole proprietor, independent contractor still pursue the PPP when it's just them? Yes, you can. I tell people, look at your cash flow, which gives you a better deal. Is it the P3 or is it going on unemployment? Those are things you kind of have to look at from a business standpoint when you look at this picture. The other thing which Tim and Joey did an excellent job of, several questions were asking about the new requirements, and they did an excellent job of covering. I think one of the biggest ones that provides a very wide safety net for people now is the ability to highlight government mandates like the governor did for shutting down facilities and things like that for a period of time, length of time, and ended up losing your employees who pursued the unemployment opportunities because of what the federal government was offering. So those are things that you are able to use as documentation. But the other thing is related to employees leaving, that if you do hire people to replace them, you can use them, use the P3 funds for that, because they're basically taking the position of the person that used to be there as you go through this process. The other thing is that transportation was a question that came up commonly. And really, this is people that are really kind of focused in the transportation sector. So if I'm a truck driver and that's what my livelihood in life is, well, gasoline is basically my utility. And so it's kind of understanding what that it was identified for a particular sector. So just to make people aware of that, phones was another one that was asked all the time. Yes, and that was brought up by Joey concerning that. The other question that came up, and Joey did an excellent job of explaining, and so did Tim in the document, the Form 3058. It identifies what is being requested for submittal by the federal government. But please understand, the lender can ask for more information for their procedures. So that is the minimum, and the lender can request for more information to bring clarity into how the funds were spent in that. So just to make people aware of that. And the other thing is, I want to stress to people, please look at the Internal Revenue Service, because they're going to be having guidelines. And one of the big ones that just came out here is dealing with payroll tax. And that will be coming out with some direction from the IRS, how that's going to look for paying those fees and that during this time when you have the loan, whether you have it for the 8-week or 24-week period. And then also what the requirements going to be, if you've already been paying the fees, what do you get, and how will it be handled for future reference? And those guidelines are being developed. The guidelines have been gone through, have been submitted. They're going through final review, and hopefully by the end of the week, those will be out on the market so everyone can see the new tools. One of the other things that the federal agencies heard, Treasury and SBA, was the complications of the 11-page document, and they're reviewing that, trying to figure out ways to make it more simple. So that is under consideration, just for reference at this point. And with that, I will turn it back over to you, Sandy.
Thanks, Carl. We still have a number of questions, so I am just going to randomly ask, and I'm afraid we won't be able to answer them all tonight, but we will do our best. And again, a lot of them are repetitive, so I'm trying to go through this. For real estate agents receiving PPP loan paid to them directly, how do they document payroll to request for loan forgiveness since there is no payroll doc to provide?
So for self-employed, single-member LLCs, your compensation that you take is generally through a draw process. My expectation is you make regular draws, either writing yourself a check, bill pay, a transfer of funds that you can document within the guidelines of the maximum forgivable amount. I'm assuming will be acceptable to the lender to document that portion of it. Keep in mind a couple of things. One is, I guess one of the questions is if you were to figure out during the 8-week period, what would you be eligible for as a business owner? And the guidelines were pretty clear that that if the maximum would be based on a $100,000 annual salary divided by 52 weeks times 8, that would have been 15,385 would have been the maximum for a business owner to declare as compensation. And then we would look to see that you've actually distributed that during the 8-week period. Now that it's 24 weeks, well, my understanding is now it's instead of 8 weeks times the weekly amount is now 24 weeks. So it actually gives you up to 46,000. Keep in mind though, it is also subject to your 2019 compensations. If you did not take at least 100,000 in 2019 as profitable from your business as declared on your Schedule C, the amount that you can take in 2020 during this coverage period would be reduced.
Carl, did you have something to add?
No, he did an excellent job. It literally has to be apples to apples. I've had several people call and ask if they could give themselves a bonus. And I'm going, no, that's not the intent of this. This was basically to keep you whole like you were last year, and that's the intent. So the idea is as long as it's consistent with what you showed last year, you're going to be okay. But if you're trying to add numbers just to say, well, I got this extra money I'm going to and put it in my pocket, it's going to red flag very quickly.
How do I figure out the wage period for an employee who is 100% commission based?
Mike, you might want to weigh in on this. My understanding, it will, as commissions are calculated and paid during a payroll process, they would appear as wages on your payroll reports and your 941. So I would assume that as long as the commissions are paid during the coverage period, would be the form of compensation that's being documented.
Yeah, and a lot of it's going to be driven by what the borrower provided to their lender when they obtained the PPP and what was acceptable at that point in time. It's unclear to me from the question whether or not this is somebody that's already received a PPP or is contemplating trying to get one, because whatever documentation you gave your lender when you started the process, the assumption is that you would provide similar documentation to obtain forgiveness. So if they accepted certain records up front, they should accept those same records on the back end to prove your eligibility for forgiveness.
Okay, thanks. We've got several questions regarding the EIDL and the PPP. Can you all touch on the difference, and if you have a PPP, the application is just for that. It doesn't include the EIDL to ask for forgiveness.
And Carl, I will want you to weigh in here, but the way we the application, it certainly seemed like if you received an EIDL advance, not the EIDL loan itself, the advance would come out of the forgiveness. And then the EIDL loan itself, as long as it is not used for the same purpose for payroll during the forgiveness period and used for other working capital, as long as we say no double dipping, then the idle loan can be separated.
Yeah, the way they're going to do this, because a number of people got their the P3 before they got their idle advance. Basically, all that's going to happen is the lender will submit the packet for forgiveness, and then what they're going to do is do a cross-reference on the Office of Disaster Assistance with that company's EIN number in that. And then at that point, when they see it come up, they're just going to deduct that amount from their P3. So that's the way they'll do it. So it's not going to, we're trying not to put more burden on the lenders to try to go chase this when the potential borrower may not be sure, because there's been a lot of confusion whether they got an advance or whether they have a regular idle loan and things like that. So that's kind of how SBA is going to do that when the packet is submitted at that time, dealing with it. And yes, that's another big issue that's coming up is a lot of people are trying to use the idle loan, the regular idle loan that you have to pay back at the same time when they're doing the P3. And several of them are getting them literally. I'm glad they called. We've been able to stop them because they were going to use it wrong, and which was going to end up costing them in both areas. So I stress to people, please try to keep that distinction really separate, understanding how those funds are used. And if you're going to use it for payroll, make sure you use it as was brought up after you're done with P3. Then at that point, you want to use it, fine, but make sure you make that line very distinct and clear. And now that they've extended to 24 weeks, that even makes it potentially more trouble with the idle loan. So please do your due diligence as you go through this process.
Yeah, and keep things separate too. A lot of banks are putting the PPP money in separate accounts. We recommend to our clients that either they do the same or they at least set up a separate accounting system for PPP as well as idle, so there's no commingling, because as Carl has pointed out, you're going to have to be able to provide that separation when you submit your request for forgiveness under PPP. And if it's not clear to your lender, they're going to have some real heartburn trying to qualify you for forgiveness.
So Carl, can I just add on to that last question? So to be clear, a business owner that received, let's say, the maximum $10,000 advance, no matter what, even though they have gotten to 100% forgiveness and potentially could exceed it based on the 24 period, the $10,000 will be taken off the forgiveness and will convert into a loan through the lender. Is that correct?
At this time, but as I say, wait till next week because that's the way things are changing. So I promise you, as more people, because this has become a hot issue, I can state that very clearly. In all likelihood, there will be changes again.
Sounds like a soap opera as the PPP changes. Okay, we've got a question from Facebook. If an employee's hours are reduced and the employee applies for partial unemployment, does the payroll for continued hours still count towards the payroll expenses for forgiveness?
My assumption is, yeah, it's whatever is paid through payroll, even reduced hours, are part of the worksheet tables that will be part of the total amount that rolls to the application Schedule A. The individual, when they file for unemployment, may have their benefits, though, reduced because they are getting compensation from their employer, so they may not be eligible for full unemployment. It'll be likely a combination of the two.
Okay.
Another follow-on to that is that you're going to have to make sure you have your documentation, because one of the questions that come back from the federal government side is, why were you not able to pay them full? And so
Okay.
you'll have to have that answer prepared to justify that arrangement, because that was not the original intent of the program.
We have Matt Hove with us. He joined us. He's with Virginia Community Capital. So, Matt, thanks for joining us. And I know these guys are going to make you have some tough questions, but let's continue on. For an S Corp, is the employer contribution to 401k an eligible expense for the PPP forgiveness?
Yeah, I would say that's explicit. Yes. So that's certainly that's the intent.
Yep.
And can they use the HSA contributions as part of their health insurance costs for forgiveness?
I would say
If that's written,
yeah. If it is part of their comp plan, sorry, Carl, jumping over it. Part of their comp.
Yeah, that's right.
It's in the employer's contribution, not the employee's contribution to it. Yes.
Okay, we've got a long one here, so I will speak slowly and try to keep up with me. For the new PPPFA, what do you anticipate the interpretation being for the 100,000? 8 by 52 equals 15K versus 100,000, 24, 52. Will they increase both the weeks to 24 and the amount to 46K?
Yeah, that's certainly the way I read it. And the 15K was the maximum amount that a highly compensated employee or owner could take during an 8-week period. Now we're 24 weeks. You can add another 2 8-week periods to that, and yeah, you'd be arriving at the higher number. If your PPP loan supports it.
Okay.
Does that sound right? Is that your understanding, Carl?
Yeah, that's the way they're setting up with it. Like I said, this is probably one of the most common questions that comes up, and it's not that people are making 100,000; they're trying to push themselves to 100,000. So please understand, it's not to increase your paycheck. It's basically to take care of you for what you were doing last year.
Okay, Tim, Mike, I think this is a question for you. On line 10 of the loan forgiveness application, can we now divide line 1 by 60?
I would assume yes.
Yeah. Just wait till the revised forms come out. It should automatically be changed.
Okay, on that same tone, on line 1 of the loan forgiveness application, if we make more than 100,000, then we put the 15,385 there.
That would have been under the old form. It could be more than that, but it depends on what you actually are distributing to the business owner, not just the amount. So there has to be a transfer.
Do state and local taxes include state unemployment taxes?
State unemployment taxes would be outside of the payroll calculation. We're dealing with gross wages here, not net wages. So we're excluding any federal tax or state tax that is calculated as part of payroll.
Matt, it might be good if you can touch on when folks can start applying to Virginia Community Capital or any of their lenders for the loan forgiveness.
Yeah, so it would be, and I apologize for running a little late, everyone. You would be able to, depending on your 8 or 24 week period at VCC, most of our clients are going to be in the 8-week category. More than likely, but we'll see what happens. You can apply after you've decided that covered period, and you can ask for forgiveness. Or if it's a 24-week period, then you would be able to apply after you've allocated those funds.
So Matt, I've got a follow-up question to that. If a business didn't quite get to full forgiveness after 8 weeks, but by week 10 they're there, could they go ahead and apply as once they have the appropriate documentation to show that they've maxed to the full forgiveness?
Yeah, that's a good question. I would, so long as that is allowed, and I'd have to double check those that the alternate covered period they can go up to that 24-week period if they've utilized all their funds in that 10-week period and they cover that 24-week period, then we should be able to do that. But I would have to double check with the SBA and make sure that that is okay. But yeah.
Tim, you had mentioned about a sample form, and someone asked, is there an SBDC sample form completed for sole proprietors?
Not specifically for sole proprietor, but with any sole proprietor, they would not have any information unless they've had employees on the Schedule A tables. So they would begin entering data on the Schedule A worksheet itself. So this next round, we just have the blank form that is the replica of the application itself. With the new guidance, when we get it, if we get an updated form, we'll also have a couple of sample views that would be with with some sample data in there, just so people can see it, including a self-employed person.
And Carl or Matt or Joy, I think you might have addressed this, but I wanted to verify, are delivery van expenses included in utilities?
What do they, I'm not clear on a delivery van expenses. So that's,
yeah, I
that could be a lot of different things. And so I can't honestly say that definitively yes, because I can see some things yes, and I can see some things no.
So it depends, huh?
Yeah, it depends. And I need more clarity.
Okay. If an employer pays 50% of health insurance and the remaining 50% is deducted from employee paycheck, do I include 100% of the health insurance payment in salary calculation, or only the 50%?
My understanding would only be the 50%, the employer portion of the expense that has been borne by the employer.
Okay. Is it possible to break out payroll between COVID and non-COVID related and use the non-COVID for PPP loan forgiveness and the COVID for HHS expenses?
Carl, you want to handle that one?
Yeah, run that one by me again.
Can you break out payroll between COVID and non-COVID related and use the non-COVID for the PPP loan forgiveness and the COVID for HHS expenses? Mr. Buddy Yates asked that question.
I'm trying to figure out where they're going with COVID, non-COVID. I mean, any other guys clear on what? I mean, I'm just going to look at can be used, not used. If it's tied to payroll, it goes to payroll. If it's not, it goes over to non. So I'm not really clear what he's trying to get at.
And I would say it seems that we're dealing with the coverage period. Payroll is payroll during that period. You're not splitting employees into different cost centers as you develop your schedules. So maybe if he can re-ask the question and we get a better understanding, it might make sense.
from the company loan, or can you leave it in the company account and withdraw it later?
Jeez.
Sandy,
Okay.
you look frozen. And there goes, I
I think we just lost Sandy.
think we just lost Sandy too.
Yep.
Leah Fremont here. I'll try and fill in for Sandy as we field some of these questions so the speakers can focus on the content. Oh, Sandy, are you back? Well, I'm going to drop down into the bottom.
I must have had a gremlin hit me. Okay. Sorry about that, folks. Technology is great when it works. And I lost
Must have been
my
the one that hit
question.
me earlier.
Yes, it does happen. I'm sorry I missed where I was at, so apologize for the person that I was reading their question and I've lost it. But can owners' distributions be included in the PPP?
So I guess first of all, for the loan calculation itself, if you are applying for the loan, it will be based on your Schedule C profit as the determination, not on the distributions that you took. For the coverage period, and as long as you're abiding by the maximum amount that an owner could take with a withdrawal, it will be based on that withdrawal amount that he takes during the coverage period.
Okay. One of you, could you comment on someone said that they originally thought that the full-time equivalent was for 30 hours. Did that change? Can you clarify?
For
No, it's always been 40.
Yeah, it's 40 hours for forgiveness.
Okay.
Yeah, that was sent. I know a lot of people got confused because they were looking at the Affordable Care Act and looking in on those hours, but it's stated 40 hours.
How do independent contractors who received a PPP loan account for the usage of the loan if there is no specific payroll? I work on commission normally.
Well,
I think that was answered earlier
Oh, I'm sorry.
with the real estate
he would take
commission.
Okay. As a sole proprietor, I have never written myself a paycheck. Whoops, somebody moved the questions around and I lost it. Oops. Oh, one of my team members took it off and I've lost it. Let me continue on. We've got a number of team members and I appreciate their help for tonight. And we talked about the if a business has owners that work full-time in the business and take a salary, do those salaries up to $100,000 a year count for the PPP forgiveness?
Answer would be yes.
Yes.
Well, as the basis is 100,000, though it is sort of dependent also on the business business owner's team, which would determine if they could take up to the $100,000 basis.
Okay. Again, I'm just trying to randomly go through here and get some different ones just to try to trick one of you up. That's my goal tonight.
Not going to happen.
My owner's salary is a transfer between accounts and my high premium is an automatic withdrawal from operating account. So how do I ensure that the PPP funds that were deposited into separate account are being used?
Well, that's their documentation and accounting system they set up. to track for documentation purposes with what they'll submit to the lender. That's not anybody else's criteria that's looking at that. That's basically what they're setting up as their tracking system.
And to add to that, while we recommend separating accounts to make it easier to document the transactions that are part of the forgiveness, it's not a hard and fast requirement if it doesn't make business sense or a transaction flow uses your normal operating account to conduct those transactions, as long as there is an appropriate documentation trail.
Okay, one of our managers is owed vacation pay that was incurred prior to the PPP, but was approved by the board of directors to pay them in this period of time. Can this be included in forgiveness payroll?
It was prior to
Yes.
the
approved.
date.
It was approved prior to the PPP, but approved by the board of directors, but it was to pay them during this time period.
If that's written in their policy that they have 2 weeks off for the year, and that's documented in their records, and they were going to take time off during this time period, that's just part of that benefit package they have.
Okay. Tim, where is the SBDC PPP forgiveness loan calculator located?
If you go to the virginiasbdc.org website and go to our recovery page, on the right-hand side is one of the clicks is record keeping. I keep forgetting it's. If you see the PPP application explained, click on that link and you'll see the previous recording of this webinar, as well as several other forms, including the spreadsheet that includes the safe harbor tests.
Okay. I employ a disabled person with a compromised immune system, and his family will only allow him to work limited hours, less than his pre-COVID hours. Will that count against me in FTE calculations?
In my opinion, the answer would be yes, unless there is a documented reason that you couldn't bring that employee to the same number of hours. For example, if the business had to be reduced due to social distancing or the federal mandates regarding workplace safety, and you can document that, then you'll get exempted from that. But if it is just a reduction in hours, that will translate into an FTE reduction. But it is based on the aggregate of all your employees. It's not at an individual level.
Okay.
And then also you have to look at not knowing what the person's condition at, does it fall under the American Disabilities Act requirements and things. So they kind of have to be aware of that. And they can make a business decision that they can sit there and still pay them full. That's their decision. And basically it's tied to the coronavirus. That's why they're working limited hours. So the virus is impacting them, but they're still wanting to take care of them and make them whole. So they have that option.
Okay. I have used all of my PPP for payroll. I have since received a regular idle loan. Are there any issues I need to be aware of? Can I use the regular idle for payroll now?
I would say yes.
Yeah, I think we answered that earlier, but yes, they should be able to. They just need to make sure they have good records that show the in and out flow of the PPP money versus the idle, and that there's a clear break in their funding. So there's no confusion later on when they apply for the PPP forgiveness that they did use idle funds. when they still had PPP money available.
Okay. Still trying to go through some of these. If I have employees that earn bonuses based on production, can those bonuses be included in the forgiveness calculations? These are bonuses that are apart from their regular pay and have been in practice since February 2019.
I would say absolutely, as long as they don't exceed the $100,000 annual salary cap.
Also, to put clarity on that, because I've had a few calls with that, is the bonuses are consistent what they were done previously, because I've had some people trying to increase the bonus. So like, let's say they get a 10% bonus because they met this target and they're trying to bump it to 25%. That's not the intent. The intent is to cover what you use as enticements to keep your people as previously you did the previous year.
Will the SBDCs be available to help with applications for forgiveness?
Yeah, that's what we're here for.
Yep.
Just wanted you to say it out loud. And that's a great resource for all those that are watching us. If you're not taking advantage of the SBDC in your area, you need to be reaching out. Again, I'm just trying to go back and forth to catch something that has come in that I've missed. We got a lot of sole proprietor, solo business questions, but I think a lot of those have been answered already. Can you see in any way that taking a PPP loan could be an issue in being considered for government contract with the federal government?
No, the federal government's not going to look at that. The only way that would come up is if the federal agency asks for a certificate of competency where they think you're not financially capable. But typically that's because your bonding limits aren't being met. So that's where it would typically come into play. They're not going to look at your inner finances from that standpoint. You're placing the bid. You're saying you're capable of doing the work. So that's on you. They're not saying, oh, they got a loan. They can't get to the work. That's, like I said, that should not be an issue at all.
Thanks. Does interest have to be for a mortgage, or can it be for a working capital loan secured by a mortgage?
I would say it's for mortgage, specifically for commercial property utilized by the business.
Yeah, I think that would be the case, that the purpose of the loan was not to for the purchase of the facility. It was for working capital, and therefore I don't think it would qualify.
Yeah, that's more along the lines of looking at IDA loan. That's not what the payroll protection was set up for.
Right.
Okay. And I think we've got time for one more, and then I want to ask the SBDC folks for some clarification. Have an employee who will be moving out of state prior to the end of my covered period. Will I need to hire another employee before the end of my payroll protection covered period to receive the full forgiveness?
That was answered earlier on too. It's just about documentation of the employee left. You made your attempts. You didn't get anybody hired within that time frame. And they understand that, just because the way the market is, especially with the unemployment benefits and things like that. They know that it's not until after the end of July, and that's kind of one of the reasons with the 24 weeks, after the end of July, when unemployment basically goes away, that federal benefits part, that all of a sudden employees will be coming back to the market. And so if you happen to use yours before that, they're going to understand that. Just have to document it.
Yeah. I think as long as you make a good faith effort to replace that person, then you'll probably be okay.
And can you touch one more time, because we continue to get questions, if you got a PPP under 8-week rule, can you request an extension to 24 weeks?
Well, I believe it is already extended to 24 weeks. The 8 weeks is no longer the coverage period. We're not extending or increasing the loan amount that you derived based on the 2.5 months, which is the equivalent of the 8 weeks plus some. So it is an extension to 24 weeks, and hopefully you're being able to maximize all of your loan for the forgiveness purposes.
Right. And under current rules, you can only have one PPP loan. Apparently, some borrowers received multiple PPP loans because there was a glitch in the SBA system. So if anybody on the call got more than one PPP loan, do not spend the money, please, because at some point in time, they're going to ask for the money to come back. And so make sure you don't take a trip to Tahiti with the second PPP advance, because sooner or later it's going to catch up with you.
And then I think this is a question that some of our team behind the scenes answered, but it may be something that, Matt, you want to share with folks. What documentation would I need to transfer a PP account to operating account? And then also the operating account records showing the payments.
Yeah, for that, you would definitely want to show bank statements showing the flow of funds between the operating account and the funds that you transferred from the PPP account. You would also want to provide your lender with canceled checks or payments, other means of showing that you provided those payments to your employees, however may that be, however that comes about on your individual business.
Okay, we have 3 minutes to the panelists. Is there anything else that you would like to share with our participants that perhaps was not addressed that came to mind?
I can't say that I've got anything that I haven't addressed. The biggest question remains the potential effect of the FTE reduction. And when we see language about returning to full employment by December 31st, we're still not sure how that affects that FTE reduction, or does it at all. So that might be the one question I'd ask Carl. In your interpretation, how does the end of the year come into play from returning to a full hire as it pertains to forgiveness?
Yeah, actually they're working on that. It's a great point, because they know that's going to be a stickler, especially with those people trying to do a 24-week. The other thing, tying to the employees in this aspect, I just lost my train of thought. Well, it'll hopefully come back to me with that. But no, he's right. What he's bringing up is how they define that FTE. And like I said, hopefully by the end of the week, they'll have that out. And I know it's going into what we call final clearance. So I know they've done all the preliminary part.
We've had clients that have happy to begin paying their employees again. They clearly can see when they're going to meet the 100% of the PPP, and then really don't have the funds after that. So upon exhaustion of PPP, they're likely going to need to do furloughs and layoffs again, and that may be during the 24-week period. So the biggest concern is, how do they ensure they don't get an FTE reduction? The one thing I want to stress, and they've really
came out and pushing this, there's going to be a lot of leniency on this. And the main reason is because there was a lot of things that when this was originally created came up after the fact, like government mandates and social distancing. And then even now, as we go into our phases, a restaurant can't have more than 50% capacity. Okay, I got to run at 70% to break even. They understand that this has had much larger ramifications than what was originally thought going to be. And so that's why these new things, I know they came out late in the game, but have come out. But the thing is, they're really pushing that, just document the leniency part about the things that you had to deal with that were not accounted for when this originally came out. Because like I said, when this originally came out, everybody thought that the economy would be purring by the end of April, that there would be no issue. But we've seen the consequence of it. And we're still seeing the ripple effect because nobody's traveling for tourism season, things like that. So there is a ripple effect, and they understand that.
Matt and Joy, anything you want to note from a lender's perspective?
No, I don't have anything to add. I'll ask Matt if he has any follow-up comments.
Well, seeing as I didn't see the presentation and the updates, I will say, as Carl said, document everything as best as you can. Talk with your lender, whether it's with us at VCC or elsewhere. They're going to have a direct connection with the SBDC and the SBA. They're going. No lender is intentionally trying to deny your forgiveness. They're probably going to work as best as they can to get you as much forgiveness as you can. So just work with your lender and good luck from there.
Thank you. Thanks for everyone for joining us today, and I hope that our panelists were able to answer a number of your questions and you have a better understanding of how the PPP loan forgiveness, what the requirements are on the application and how to move forward. And I also want to especially thank our presenters. I know it takes a lot to do something in this time of the evening after having a long day, and I personally want to thank you for all you're doing to support our businesses through probably one of the most trying times that any of us have ever had to encounter in our lives. And I know it's even more impactful on our business community. So I hope that our viewers know that there's help out there. I've been working in economic development for close to 30 years in Virginia, and I tell people that there's more resources to help small businesses in Virginia than I know of any other state. So if you don't know where to go to, reach out to one of us and we'd be happy to help you. But this session has been recorded, and again, it will be available on the SBDC's Facebook and website, and then the Virginia Community Capital will have that on our Facebook and website. So again, thank you for coming, and I'll wish everyone continued success, and we're going to get through this and we'll be all better. But thank you again. Appreciate it, everybody.